edition of Market SkyCast, your official Blue Sky podcast. I'm Justin, your host, and as always, I'm here with our other coaches, Coach Becky and Coach Matt. Welcome in, guys. Thanks for taking some time out of your holiday to kind of join me in. And special shout out to Nick, our producer. You know, he's supposed to be off today, but he's here with us as well. So thanks again, Nick. So, guys, I know every time we say this, but I'm a broken record, but we got to talk about the situation over there in the Middle East. And I feel like this is every time some news comes out and you need to wait or else you're going to look very, very stupid talking about it because it comes out that it's wrong and it's totally different and Trump was lying and who knows what to believe anymore. But Matt, I know you're ready to talk about this. What are your feelings on this this news that comes out?
You know, I think it's one of the things that are very important to understand early this week, because over the weekend there was significant chatter on a potential memorandum MOU, which is a memorandum of understanding regarding the ceasefire and ultimate agreement out of Iran and the United States, and to basically end that military conflict, the Iranian war. And you know, it's on Twitter, social media in general, I would say, but people like to not wait for confirmation. Let's say, like everybody's an aggressive trader, market order right above a 1 minute resistance level when it comes to the Iranian war. And you know, it's one of the things that we saw a lot of headlines, a lot of speculation, a lot of chatter regarding an agreement. The president came out and acknowledged that they were very close to agreement. I believe he said they were at about the 95% level, just at that 5 yard mark, wanted to punch it into the end zone. And so over the weekend, there was a lot of positivity regarding a potential deal, and you are still seeing that in the price action here. You saw crude oil come down fairly aggressively in the futures market yesterday. That saw some continuation sell down. I made a comment last week. I'll reiterate it this week that as long as crude oil is above $90, there is some degree of elevated concern regarding the Iranian conflict. As long as it's above $80, there is some speculation there on a real agreement that we see an end of the hostilities. You're most likely going to see a pretty significant sell-off in crude oil, maybe even down into that 80 level. But in general, what we are seeing on the news here this morning is not nearly as, shall I say, exciting as what we were seeing over the weekend when the president was talking about 95% of a deal done. We have an agreement. We just needed to, you know, I believe there was speculation we would have a deal done on Saturday. Here we are on a Monday, and now we start to see the walk back. And it starts first out of the Iranian side of the equation. They started walking it back. The Ministry of, I believe, I forget what his title is in Iran, but it's one of the ministers in Iran said there is no agreement. There was no talks of an agreement, and anybody who said there was an agreement is flat out lying. Well, over the weekend we were all right there, and so there is significant chatter. I don't want to say there's no agreement here, because there is significant chatter. And in any negotiation, you're going to see ups, a little bit of, you know, walk back language, tough language, threats. It's going to happen, especially on the geopolitical side. So I don't want to come across as there's no agreement here, because we are closer to some degree of agreement right now than we were a week ago. But now we're starting to see that walk back. We're starting to see Israel get a little bit more aggressive. And so what was an anticipation of an agreement coming through the weekend, we're here on a Monday morning, and there is no agreement as of right this very second. So a little bit of the yin and the yang when it comes to the Iranian war conflict. And it's going to be one of those things to keep an eye on early this week, because I do think there's going to be headline sensitivity. Whereas the last few weeks, there wasn't nearly that. I do believe this early this week, Tuesday, Wednesday, there's going to be a little bit of headline sensitivity to the Iranian war. So that's just something to keep an eye on.
Yeah, I kind of feel like it's the headlines are starting to get a little more intense, and the market's kind of feeling it. But I also feel like, and let me know what you think, but the poly market betting, I feel like they're just manipulating this right now. Is the war going to end? Is the war not going to end? There's probably so much insider trading going on in that.
I want to see who's doing the insider trading on
Come
poly.
on.
That's what I'm saying. You see a $1 million bet come in, last night at 8 p.m. or something. It's kind of wild.
we've seen active military service members put
Yep.
bets on Poly Market
Yep.
on when the Iranian, like there was one, it wasn't about the Iranian war, but it was about the situation in Venezuela. Will Maduro be taken out by X date? And one of the guys going down there put like a $400,000 bet. Yeah, we're going to get Maduro by this date. Yeah, we are.
Exactly
But I know
right.
that's not the insider stuff you're talking about, but I'm certain there's a little bit of that going on. And I'll, for one, that stuff gets me, my blood boiling so fast when it comes to the insider stuff. I think we just have to knock that down and be very aggressive in it, but it's happening quite aggressively right now. Yes.
Absolutely. Now, this is a question from the chat from Jesse, and I was going to ask you guys anyways. How are we all doing? Did you take any trades on this holiday? Becky, let's start with you. Did you take any trades?
No, I sometimes trade holidays. I'm probably 50-50, honestly, but it more depends on what I have going on with my family and like what the day looks like and if I want to get up because I'm West Coast. And so for me to trade the stock market open, I get up like 5:45 at the latest in order to be sharp and organized with the process that I like to perform. So for me, I had a full weekend. I have still a lot on my to-do list before officially getting into tomorrow. And so I was like, nah, I'd rather take like 2.5 extra hours of sleep as was my choice today. So that's always my argument on holiday days. The price action is generally not as good. However, with the news catalyst this week, I think there was actually some kind of interesting moves this morning when I looked back. But for me, it's optional. And if I do choose to engage, I usually just use lighter size and aim for closer targets because oftentimes the range is smaller.
Yeah, I mean 5 a.m. on a day off, I don't blame you at all. I'm the same way. I actually I didn't even open a chart until right before we did this podcast, and the NQ is almost top 30K. I was not expecting that. Matt, what about you? Did you touch the Globex session last night or anything this morning?
I was there. I was watching. I was breaking down the Asian Open yesterday. We had a really good futures open, but that was kind of everything that was being priced in over the weekend on the hypothetical scenario that we get some degree of an agreement out of the Iranian war. So I got around like I usually do around the Asian Open, and I'm going to tell you guys right now, I was getting bored to sleep last night. I was talking to a bunch of traders last night, and the orb on the Japanese Open, the first 5 minutes was a doji. The last 5 minutes of the opening 15 minutes was a doji. And I sat there for about another 30 minutes, and I'm like, guys, it's a really good breakout. It's like a really good breakout. But there's like 5 dudes and 3 gals trading around the world right now. There's no volume. And so, no, I ultimately has said, you know what? I think we got a good breakout, but I'm not going to wait for the next 5 hours for a 10-point move. And so that's but no, I was there, but no, I didn't pull the trigger. I kind of walked away and watched a movie with the family.
Yeah, I do the same thing. I typically don't trade Sunday nights, and going into a holiday on Monday, and I know I can sleep in. I'm staying up a little later. I'm sleeping in. I'm just not even thinking about the chart. So if you guys trade holidays, keep it light, keep it tight, and don't go for home runs. That's my advice. Now that we kind of talked about how it's going on in the Middle East, things like that, like we always do. Last week was pretty interesting. We had a couple big earnings. Headlines came out. Price action was interesting. Becky, I saw you actually had a killer week last week. I saw you posting them gains. For me, I think the name of the game was patience last week. What was kind of the theme for you?
Yeah, I agree, actually. And on the topic of the Middle East, like I am so like I have to dig into my technicals right now because it's been so interesting. We've been getting more and more tweets and information coming out all the time, and it's oftentimes unsubstantiated and does have that pullback. And so I have been having kind of an odd week where I'm looking at it a little bit differently, and I'm trying some different tactics because honestly, I did some business last week on my extra accounts of like when we see those big news pushes, there's so much unreliability in the news energy lately that I'm just fading those every time, and it is buoying my accounts. Let me just
of course you are.
Holy moly. I mean, you know me, I'm a little contrarian. But I think that you guys, that's a nod for I want you to like just on the hinges of like the fact that this Iranian war there is some movement right now. And so for me, I am constantly trying to remember, especially coming into this week, to be careful with it, because at some point the news is going to hold. And so lately we have been able to see that these pumps are not following through, and there's such a huge risk of chasing these big moves because they have been faded every single time. They've fallen back pretty substantially. And so if you're trying to chase in news catalysts, be very, very careful. Now, at some point it is going to be the outcome, and hopefully it will be a positive outcome, and that move will be supported. And so it's been an interesting week of like ups and downs, and these sideways markets I don't mind, because I do, as we talked about in Power Hour last week, I do love a mean reversion when I get it. However, you have to be very careful with that, because you need to see breakdown at a key level, and the market context has to fit it. And so for me, I do well in those environments because it sort of fits with how I like to read the markets, which is why on trending days, I'm like, so just be careful, because I think it was an interesting week last week, but it doesn't always read that way. So if you got kind of caught in that, I would encourage everyone to do some back testing on that, because there has been a lot of up and downs. And when we're in that situation, there's a different type of trading energy that is a little bit more settled. And so that did save me last week.
Yeah, so it's funny you mentioned go ahead, Matt.
Can I just add one thing to that on what Becky was talking about, the Iranian war situation? Remember one thing, the market's pricing in alleviation.
Yes.
The market is, as of right now, we saw it with the gap up yesterday. We saw it with the pricing power of the Dow Jones late last week. NASDAQ, can we just give a moment for the NASDAQ drilling 30K here today?
I know I was loving it as a NASDAQ.
I know it was 5 points away, but well done, NASDAQ, when you that 30K level. But it is pricing in a deal, at least the memorandum of understanding that's going to trigger another phase, because this is going to be, if you know Trump, he's going to do this through a phase build out, phase 1, phase 2, phase 3, like an old real estate developer. Phase 1, let's get to a memorandum of understanding. Phase 2, let's negotiate nuclear. If they can't even get a memorandum of understanding that does not even include nuclear, we better be ready for something along the lines of an escalation situation. So it's just one of the things that's on the back of my mind, that markets are pricing in positivity right now. That's why crude oil's down big here today. That's why the ES held the bid. That's why the NASDAQ held the bid. That's why the Dow Jones held the bid. That's why we had a little bit of pump coming into the rest at the end of the week last week. So it is pricing in the memorandum of understanding. If it doesn't go through, like we're seeing this morning, you could see some shifting volatility. So keep an eye on those headlines, because right now market is thinking positive. So we'll have to, there could be some uncertain volatility here early this week.
Point. Mm-hmm.
I want to go back to what Becky said. You mentioned you're not the best, or it's not your favorite when trend days. You kind of like those days where it chops around, you get those mean reversion plays, you can fade the market. I'm the complete opposite. I want to hit the buy button one time, and I want to hold that thing all damn day. And
Matt, I watch you holding sometimes when you stream. I watch you holding it, and I was like, I'll be out. And sometimes we get in at the same trade, or I get in first, and I'm like, nah, I'm done. And you're
there's a lot of times where I'll see people take 15 trades within the same trade I'm in, and we get the same amount of money, but I'm just kind of sitting here like, yeah, guys, what are you doing for lunch? It's a lot less stressful for me. And I think, Matt, you like to kind of ride a trend too. Find the breakout and ride the trend if you can.
Oh, I'm definitely a trend trader. No doubt about that.
I need you boys in my life.
Every time Becky's counter trending trading, I just adjust stop loss usually.
Exactly. Ride the 9 EMA, right? Mm-hmm. Now we mentioned that it was choppy. There was a big reason why it was choppy. And I know, Matt, knowing you, Mr. Earnings, you probably deep dove into this report. So what do you think about NVIDIA earnings? There's a reason we chopped kind of up to it. There wasn't too big a move. So what do you think about it?
Well, number one, and team, if my audio is having issues, let me know. I'll see if I can fix. But it does look like it's okay on my end. I'm getting good audio on my end out of Becky and Justin as well, but we have had a couple comments on it. So I was just wondering there if you guys are hearing anything. In general, what I'll say about NVIDIA's earnings report is I felt NVIDIA's earnings report was absolutely a rock star report. I felt it was absolutely amazing. I don't have any negative feelings towards it not being up 1 billion%. The market is very, very, very keenly aware of NVIDIA's greatness, and they certainly pulled off a hat trick in this earnings season as well. EPS beat by 10%, revenue is up 85% year over year, just a mind-boggling number. Especially when you're talking about NVIDIA's revenue. We're not talking about $100 million market cap company that just doubled the revenue because they introduced a new product line. We're talking about the number one biggest company out there in the world with revenue galore, and they're up 85% revenue. Q2 guidance was increased by 4.5%. Justin, when we were talking about this week, I said I expect somewhere around an 8 to 10% beat and about a 5% increase in guidance.
Hey, spot on, brother.
That's exactly what they pulled off here. But where NVIDIA really shines is kind of in their secondary numbers. Data center revenue was up 92% year over year. That's their core business. That's their GPU business. And unlike a lot of the Max 7 companies like Meta and Microsoft and Google and Apple, they have all these different segments. NVIDIA is more of a vertical monopoly powerhouse, and they're trying to build into a horizontal juggernaut. So in the AI trade, you got these vertical integrations that just specialize in one area of the AI trade. In terms of the, thank you for that, Jesse. In terms of the horizontal leadership, you have these juggernauts that have different segments that all report into the company. NVIDIA is trying to do that with networking revenue, and that networking revenue was up to $14.8 billion, up 199% revenue year over year. Gross margin remains absolutely knockout elite at 75%, and they also authorized a 1 cent increase in their dividend, which I'll tell you exactly why they did here in a second. And they also authorized an $80 billion stock buyback program. The increase of 1% in their dividend, just one, it went from 24 cents to 25 cents. All right. So you see this one over here, 1 cent up to 25 cents. Well, that means Jensen's salary this year goes from like 20 million to 220 million.
Oh my God.
Yeah, that's that increase in dividend. Wow. And so it's a little bit of Jensen here.
I need a raise like that.
Yeah, exactly.
Let's go. We need to upgrade.
Yeah, just give me a slight uptick in dividend and let's bank in those millions. But I wouldn't make too much over the price coming down post earnings on NVIDIA. Still bullish, still a bullish retracement. I was a little surprised we didn't get any movement because on earnings day was the doji. But in general, the AI trade is extremely healthy. NVIDIA proves that out. There's no doubt about that. And just very quickly, there was another very important semiconductor AI name, ADI, that came out last week. They had a gap down situation, but they beat by 7%, increasing revenue by 37%, and guidance was up by 10%. And so we are seeing a little bit of slowdown in the AI trade post NVIDIA. And realize one thing, team, we're dealing with that in an extremely overextended environment when you're dealing with the NASDAQ right now. And so you did see a little bit of downward pressure in price on earnings due to ADI and NVIDIA. Both had really, really, really good earnings. But ultimately, what that leads me to believe is we're seeing a little bit of rotation here. The sign of an extremely healthy bull market is not just the leader of the market doing great things. Like every market has a leader doing great things. The best markets out there have sector rotation models where the leadership gets overextended, takes a little bit of a break, where other areas of the market step up. And that's honestly where I'm kind of interested in this week is we got a lot of things firing off right now in the market from the bull side. The Dow Jones broke out of that 50K with a little bit of momentum. So you see NASDAQ kind of creeping up here to 30K. Well, the Dow Jones is on a Falcon Rocket 9 right now, going up to the moon. RSP, which represents more of the cyclical nature of the S&P 500, finally broke out of that 205 level. And when you look at that on a weekly chart, just beautiful multiple time frame situation. So it's
we were
not
just talking about that last week, weren't we?
Yeah, it's because I've been looking at it for a month and a half.
I think you were saying the RSP has to break out of this or else everything's going to go down. Yep.
Yeah, it has to break out of 205. And you got the Dow Jones breaking, you got RSP breaking, and you got the NASDAQ and the ES still doing what it's doing. The anatomy of a bull market is rotation where other areas take a step up. And the ultimate question is, can the Dow Jones in the cyclical areas of the market Can they take a step up here? I don't want to say anything negative about the NASDAQ, by the way. The NASDAQ
I don't think you can.
is the leader in the market. It's where every theme is driving right now. It's a beautiful breakout as well. I'm just saying at this point in the saga, it's not just the AI trade that is rocking right now. You're starting to see other areas of the market start to perform a little bit better as well.
Which will make the trend all the more strong as it pushes forward, because it is supported by multiple factors, with the positive anticipation with the Iranian situation, plus the backdrop of like a positive earnings season and everything kind of catching up and moving together. It's more of a sustainable trend sometimes when there are multiple factors that support the direction that we're going in. So, I mean, that makes me, have to face the music with, staying on point with the trend, because it's obvious on all of those different timeframes and different ways to look at it and understand the assessments. And, fundamentally on Forex this week, there's not any catalysts that are very concerning. There's quarterly GDP on Thursday, but that is anticipated to be positive outcome. And then otherwise, there's just really not a lot of information to be released this week. It's a short week. So, I mean, I wouldn't be surprised if this trend continues with all of the things that are, being factored in and what is supporting it all. NVIDIA is a powerhouse for the indices, and it did have a nice pullback on earnings. And so she could launch at any point here after that little pullback.
Yeah. And I don't want to mince words. NVIDIA's report was absolutely outstanding.
Yeah, she's
outstanding. Every other company in the S&P would do a lot of things to get that type of report. Quite frankly, it was a very, very good report. And I'll just kind of jump on what Becky was saying about the economic landscape this week. I'm interested in consumer confidence. I'm interested in the PCE report, but those are secondary reports. Even the PCE report is the fourth most important report from an inflationary perspective. It just so happens to be the Fed's preferred gauge. And as to the preliminary GDP number, I know it's red. It should be yellow, because it's the second report in the GDP series, the advanced number, the preliminary number, and then you get the final number. And we already kind of know what the number is. Yeah. And so they're not breaking any news with that red report on the preliminary GDP number. So I think the number one economic report is the PCE report this week. Second would be consumer confidence, but I have both of those as secondary reports.
Now, before we get into the future, I do want to talk about one more thing that happened last week, because last week in our podcast, we mentioned Walmart earnings and that how it could be an indicator of inflation or consumer confidence. And Matt and I, we were kind of talking about this earlier. Do you kind of want to expand on what we were speaking about earlier?
Well, one of the things that economically is starting to get a little bit concerning is consumer confidence. And we saw record prints on the low side of the consumer confidence report, where it came in at 44. That's the lowest number we've ever seen on the consumer side of the equation. And one of the things that people don't understand about the strength of the S&P and the strength of markets in general is 70% of everything is driven through consumer spending. And so as consumers are happy, we know they spend a lot. Revenues go up. When consumers get tight, they get a little concerned. They start pulling back, especially on big ticket items, especially on those discretionary big ticket items. And so, it's one of the things that, if I were to say the two reasons why the market's at an all-time high right now, three would be AI, but the first one would be the strength of the consumer over the course of the last 15 years has been a historical advantage. And that's because number one is the Fed has printed more money in that 15 years than at any point in human history. In fact, we've printed more money in the last 15 years than we did in the previous 235 years combined in this great nation's history. And so the consumer confidence, along with monetary policy, has really been the driving force of the market. It has very little to do with the overall economic environment, quite frankly. And so is the consumer getting a little bit weak here? It's, if you go out on the street right now and you ask 100 consumers, how do you feel about the economy right now? You're probably going to get about 80 of them that complain right now about the economy.
But 50K, Matt, 50K.
Yeah, 50K, but down 50K. That doesn't have any impact on anybody that has to put money in their gas tank to go to work right now. You know what I mean? Nobody likes spending $5.50 for gasoline. That's going to have an impact. And so, yeah, I wouldn't describe the consumer as weak, but I would describe the consumer as stretched right now. And that's going to be a little bit more of an important conversation. And so Walmart kind of showed that as well as they lowered their guidance last week. And so Walmart, we just got talking about the strength of NVIDIA's report. Here's Walmart's. They beat by 1.5%. Revenue was up 7% year over year, and they decreased forward-looking guidance, saying, listen, we have a little bit of concern for the consumer coming up over the next quarter. We're going to lower our guidance. The consumer comes out 2 days later, reports the worst report they've ever seen in the University of Michigan Consumer Sentiment Report. And so it is a growing concern in the market, and it's something that we need to highlight a little bit more in terms of the viability of the consumer in America right now. And there are a couple reports this week that are going to help us understand that. The consumer confidence report tomorrow, but you have Costco's earnings to kind of go along with Walmart's earnings. If Walmart gave us concern, if the consumer confidence report kind of confirmed that concern, well, does Costco alleviate that, or do they put the final nail in the coffin on the concern of the consumer? And so the consumer's on my mind going into this week a little bit more than they usually are.
Yeah, I just wanted to bring that up because we were literally talking about it, and it just showed us what the report was going to do a couple of days before it came out. So it's always good to kind of look at everything through a broad lens. And we already kind of touched next week is very light on economic data. So I kind of just want to ask you, Becky, how are you approaching this short week? Do you kind of take a different approach with a short, light data week, or do you just business as usual, just be a little bit more safe, I guess?
You know, I've actually looked back at shorter weeks, right? If there's a holiday day that makes it a 4-day trading week versus 5. And it's inconsistent, honestly, whether or not we get like a full-size weekly candle versus a smaller, choppier weekly candle. And sometimes it's based on the magnitude of the holiday a little bit. You know, sometimes the Christmas and Thanksgiving weeks are kind of standalone because they're a little bit more broadly celebrated. But I do find that it's really inconsistent. We could have a large week in terms of the weekly candle or not. And so for me, you guys know what I'm going to say, right? I'm just technicals. Like I do want to know about the fundamentals. I want to have it on my radar when something is anticipated, and then always be cautious when something can just drop at any moment. But for me, it's the larger time frame levels. It's my read of context, and it's my best setup going into a trading situation based on where price action is and the momentum of the moment. And then I just always trade with stop management, with risk management, so that way I'm protected regardless. And I gotta, lean into my technicals unless, advise otherwise based on something that pops.
Yeah, I think that's the best way to do it. And we talked about, light economic data. Earnings seems kind of light to me as well. But Matt, is there anything that's even on your radar that might push the indices in a certain direction?
I don't think there's an indice mover this week. There's some interesting names as you go down the board, but I don't see them to be a major catalyst. Like Walmart and NVIDIA last week were so much more important than the names we're getting this week. Mm-hmm. But there are some interesting names: Costco, Dell, Marvell. Marvell's a tier 3 AI name. They're going to be important. Synopsys on the AI trade, Snowflake on the AI trade. ZS Scalar on the AI trade, but Costco on the consumer and a couple on the AI, CRM on the AI side of the equation as well. And so you got some secondary reports this week, but you don't got any leading catalyst type names this week, in my estimation. I do want to just say one thing about what Becky said on a light week. I actually really, really enjoy light weeks economically and earnings. I feel like we can laser focus on technical analysis. It's notwithstanding the Iranian war updates that we anticipate to get some headline news. I typically do enjoy lighter weeks in the market. We don't get as much volatility typically because you don't get as much information to drive price, but you typically get a little bit more consistency, I would say.
Lose out some.
Yeah, I got to agree with you because this is, like you said, there's not as much volatility, but if you want to catch a trend and just sit there and adjust your stop loss, these are the kind of weeks that
up and trail 9. Yeah,
get in early. Yeah, honestly, you can. These are the weeks that I typically don't trade pre-market, but these are the kind of weeks where you can get a good fill pre-market, ride it into open, and hopefully just hold it all day. And Becky, I'm going to get you to hold with me one of these days, you know? But yeah, so guys, light economic week, light earnings week. So hopefully we can catch some good trends, but keep in mind that the Iranian headlines, they're going to come out. So have that stop loss, pick your 9 EMA, pick something that's going to ride the trend, and maybe we can just ride it all day. Anything you guys want to add before we get into Coach's Corner? No? All right. Well, here's my favorite segment. And again, we have switched it up rather than just asking questions, giving a simple answer. We're picking a topic, and we're going to either have a conversation where we all agree or we're going to debate each other. But these are things that real blue sky traders have asked us. And it's good because these are things that newer traders, frustrated traders, I went through all of these. I know the coaches have too. But this one is something that I personally have struggled with. And I finally have gotten over the hump where it doesn't bother me anymore. But the question is, should a struggling trader take a break or push through the rough patch? And Becky, I want to start with you on this one because this is more of a psychology question than anything. So what do you have to say about it?
Well, I think that this one, there's a lot of different ways that you can go with this. But for me, I'm a face your fears type of person. I do believe in taking breaks because sometimes when there are big impacts to our psychology, our stability, or our P&L and our account situation, that can really destabilize the person. So I do advocate for a break. And whether that's a day or a long weekend, that will look different for everyone. But I do think that when you are struggling, taking a long chunk of time is not necessarily the best idea, but more so I would encourage you to leverage way the heck down and look at it as a period where you need to adjust your system and kind of shore things up and do it in a safe way. Because when you're having a struggle period, if the losses are outsized, it's going to hurt so much more. But if you can instead go down to a small size, 1 or 2 micros, or just one eval at a time, that can help you have a period of reset where you can just focus on what does the best trade look like and focus on not the P&L or your outcomes at all, but instead your stability as a person and following your trade system. So I love a reset period because I think that in trading, it's not linear. Your movement from struggling to consistently profitable is not a straight line by any means. And so these struggle periods are a part of the game. And to say that they're abnormal or that you're somehow failing if you're in that period is just an unkind lie, because that's the way that it goes in order to get to that consistently profitable period that is even then still not perfect. And so I say as a psychology kind of focus around here of embrace that period as a time where you can grow and maybe shift with the market and learn something, speak to your coaches, speak to mentors, try and find the area that you're missing in your charts where your trades are most likely failing and dig into those contextual days and those setups that didn't work and use it as a period of growth. Something in your system is not working. And if it's strategically, focus on that. If it's your personal life where you have something going on the back end that's super emotional or stressful, or you're not sleeping, or someone is sick, maybe that is a sign where on the personal side, you have to instead back away from the charts and focus on that. Because if you're not stable as a human and in your heart and soul and psychology, no one's going to execute well. So twofold, use it as a period to work out the kinks, and either it's personal, emotional, or strategic, but focus on where it needs to be shored up, and your pullback will just be a pullback if you stick with it.
Yeah, great answer and great advice. Now, Matt, do you agree or disagree first before we get into it?
It's hard to agree with the psychology expert on a mindset question. So I'm not going to disagree with Coach Becky there. I thought she gave a wonderful answer. I'll just add a little context, I guess, or maybe just add my thoughts to it. But I do believe Becky nailed the answer. I think taking breaks is important every now and then. And I think the number one thing that I would take away from that is the break could be an hour, it could be a walk, it could be a weekend, it could be a week. A break doesn't have to be 3 months. Let's see if I come back and I still like trading. That's not what we're talking about. But if you feel like you're emotional, you should take a break. If you feel like your read isn't there, you should take a break. And a lot of times, just going for a walk, like just a quick 15-30 minute walk, collect your thoughts, get back into the right frame of mind, will do you a lot of good. Sometimes taking a couple days, recharge, refresh helps, but it really just depends on who you're dealing with. I've taught a lot of people along the way. I've coached and mentored a lot of people along the way, and my answer to those individuals will be different depending on what is causing the issue, what is causing the emotion. Is it just a tradable situation that you need to overcome, or is it some type of life situation? As somebody who's been in the market for the better part of over 2 decades now, I'm going to promise you life's going to come at you at times. And it's important to make sure that you get your life dialed in before you get back up into your day trading activities. Because if you're not thinking clearly because you got some things in life that are impacting you, take care of life. Trading's going to be here. Because if you don't take care of life, you might get busted up as a trader that you're not thinking clearly. So no, taking breaks is something that I believe in. But you don't want to be too prolonged. You want to get back on that horse as quick as possible. But yeah, taking breaks is not a negative thing.
Now, I typically fully agree with everything Becky says, but I'm gonna go a little bit off this time because this is something you're
gonna test it, huh?
Do it.
It's something I personally struggled with. Like most of us and most people watching, when I first started, I was glued to the chart for 8 hours. I knew I was messing up. I knew I needed to step away, but I couldn't. A walk wasn't good enough. Taking a half a session wasn't good enough. And I actually had this year a personal situation where it was in my personal life when my trading was taking a beating. I was taking entries I shouldn't have. And you know what? I took 2 weeks off, and I have had the best trading of my life since coming back. Like by far made the most money, taking the best trades of my life. So I think it depends on the person, like everybody said, but I think a significant, meaningful break where you kind of forget about where you're struggling in real time and kind of reset. Because I don't know about you, like I don't trade on vacations anymore. I might hop on the charts for a little bit, but I come back from vacation.
You shouldn't trade on a vacation, Justin. No, enjoy the vacation.
Yeah. I come back mentally reset, and then I forget about everything that I was struggling with, and I feel like I'm just a new trader coming to the market, and I can see it. So I agree. Like I agree with a little bit about what you said, but I think it's going to be different for any trader.
I kind of heard you agree with Becky a little bit.
She said an hour a day. I said 2 weeks. Yeah. I don't think an hour is enough.
I think everybody's different, obviously.
Exactly.
But just can we all agree that taking a break when you feel emotionally charged, whether it's an hour, a day, a week, or 2 weeks, whatever fixes the issue is a viable thing to do and probably the best case scenario.
Yeah, because an hour for one person is not the same as another person. So I agree.
It does. I want to. Oh, go ahead, Becky.
I said issue, but I meant more like the situation. You know, if it's like a big heavy thing that is not able to be resolved, like there's going to have so much more carryover with that, and the impact that you have had to your account and your confidence in trading. Also, like if it is a minor situation, if it's a couple of trades and one account versus if it's like a prolonged pullback, I think that the gravity of the situation has to be factored in, and then that kind of can create the situation, whether it's a have a walk situation or if it's a take a week off and like spend some day meditating at the beach kind of thing.
And I think a great point
you just got smoked on 3 trades and you need to take a break because you're seeing things not clearly, or is it you have a true life emergency that you're carrying your life's emotion into your trading routine? Those are 2 vastly different things that are going to take more. One's obviously going to take more time to deal with. So it does depend.
And I think a good middle ground, especially with blue sky and prop firms, is like take a step back from your live account, maybe only trade evaluations for a week, 2 weeks until you kind of figure out the problem, especially if it's not a major life issue problem. It's just something in your trading. Like don't risk your real capital, play some evals, stack some accounts, and move on when you are feeling better. And that was a great discussion. I kind of did agree with you, but I disagreed. It was just a different context. And you guys want to do one? You got time for one more? I know it's a holiday.
Yeah, let's do one more.
Yeah.
Okay. This one's kind of good because I think it leads into the last question. We'll start with you, Matt. And this kind of comes into should I take a break, should I not? But if you keep breaking your rules, is that a discipline problem or proof that your rules don't fit your personality?
Oh, that's a great question. Because there's a little bit of both in that. But if I had to say one way or the other, I would say if you're breaking rules, you're doing it because you're trying to justify a trade that you should not be taking. Your rules are there for a reason. Your rules were built over time. They were built in a laboratory that you confirm through live trading. And if you feel the need to break a rule to justify a trade, it's usually because you're trying to catch somebody else doing something, or you're trying to catch some type of volatility or some type of movement, or in general, you're doing the old problem of over trading. But typically speaking, you should not be breaking rules. And if you are breaking rules, it's because you have not tested your rules enough. And so, no, if there is a rule that you have and you are breaking that rule, you need to go back to the drawing board, because that's an emotional thing as much as anything. I don't break rules, and anytime I've ever broken a rule to justify a trade, the market teaches me valuable lessons. And so, no, I don't break rules in any capacity. It doesn't mean rules can't change. Rules change all the time, but you should change the rule after the trade, when you're going through your evaluation process and you're looking at your trade journal and you're saying, okay, is there any patterns? Is there any trends? Is there any themes that manifest themselves as you're going through the review period? But if you're breaking rules just to justify getting into some live action, that's not the rule problem. That's a you problem.
Mm-hmm. Yeah, great points, Becky. As the psychology resident, what are you thinking?
I think that it is the work of an early trader to break the rules. And I'm not saying it's a good thing. I'm saying that's sort of how you evolve. I think that there is not an early trader in existence who doesn't monkey around and find out every which day from Sunday. And I think that they realize through pain that is not the way. And so I think this is how you go from an early trader to Matt's approach to trading, where he has hard rules that he understands, believes in, created, supported, understands in every aspect, in every condition, and honors them because they work and they get him the outcomes that he wants. But when you are young in your first couple of years as a trader, you don't really have that breadth of experience where you can fully believe wholeheartedly in the rules that you have fine-tuned forever. And so I do think that if you're breaking your rules, acknowledge that and don't bury it, because you want to say, like, I was going to only trade the trend and I was only going to go longs on this day where we're only breaking highs and not breaking lows, but I instead tried to cash the top. Like, that should hurt, and you should call it out in your journal and say, I broke my rule again and it failed because of XYZ. And that is, I think, what makes the traders that make it, is by acknowledging the rule breaking and then using it for power to say, I have got to follow this rule because this pain sucks. And so I think that there's just a huge transition period where it's inevitable to do the forbidden of breaking rules, but use that to shape it and get better. Because if you can get 1% better week over week, then you will transition to the trader who doesn't break the rules. And I think what we see in the elite professional traders who manage multiple millions of dollars is that they have hard rules. They don't get to say, I'm going.
They don't break rules. Period. End of sentence. They don't break rules.
Money if you break
rules. Professionals do not break rules. Yeah. New traders, I get it. New traders have to go through the process of learning. But if you're still going through the process of learning, maybe you shouldn't be actively trading. Maybe you should still be in the process of creating your rules. But your rules are there to protect you against your worst instincts.
Yeah.
And if you're breaking those rules, you are giving in to your worst instincts. You are trying to justify a trade because you want to catch money. You want to make money. You don't want to lose money, but your rules are there for a reason, and you should not break them in any capacity ever. When you adjust rules, you do that in the laboratory after the case when you're going through an evaluation process. And I want to be very clear on this, because I've taught a lot of people, new traders, how to trade a very long time. And new traders who constantly break rules, they never get to core rules. They just always break rules to the point where they're not a trader any longer. This game we call trading, even if we do it from a day trading perspective, we should always think about it from a long-term perspective, not what you're going to make today, but why you're doing what you're doing today to get to where you want to get tomorrow. And if you're going to break rules, you're never going to get to where you want to get.
I know. And to be fair, I wasn't saying to break your rules.
No. I know. I'm just I've seen too many people break things. And
don't yell at me.
When you break one small rule, that's fine. Break a big rule and the market will literally break you, take your house, and never trade again. That's what we're talking about. And we need to talk about it with the seriousness it deserves. Rules are there to protect you against yourself.
And let them hurt. your rule breaking hurt, because that will transition you and you will understand the seriousness of it. If you intend to be a trader long term, you will realize what Matt is saying is the truth and embrace it, and then start to follow them consistently. And then as you turn your momentum from rule breaking to following your rules and the P&L follows, that is, I think, what transitions people out of that phase. So if you're still in the phase where you're breaking your rules and you're struggling, like, just really put some emphasis on, I don't break my rules. And if you have a strong trading strategy based on a playbook, then you will see that the P&L follows that rule following. And that helps shore you up in becoming the person who doesn't break the rules and can have these big growing accounts.
Mm-hmm. And I think you guys both mentioned this, but in a separate way, that your rules can be dynamic. They can change as you go from a novice trader to what Matt called a professional trader. And something I want to point out is, when you're learning to trade, I think it really exposes your personality flaws or your traits that maybe you didn't really know about. Because I'm a very relaxed person. I don't like being stressed out. And I learned very fast that I'm not a good scalper. I can't trade the 1 minute chart. I don't want to do things like that. So I made a rule not to trade on those charts. Now, as I'm grown as a trader, I can take a step back and focus only on the charts. So I think it's a great point to note that rules can change. But like Matt said, don't change them while you're trading. Trade them while you're going over your journal and doing things like that.
You just don't break a rule to make a live trade. That's the only rule you should never break. Don't break your rules to justify a trade. You could always reassess your rules. There's nothing wrong with that. You should do that.
If you establish a habit of rule breaking as acceptable, then the deeper you get into doing that every day, the harder it is to stop, because habits are dangerous and addictive at times. And so, like, try to recognize if you are breaking rules, that really is a dangerous habit to allow to continue.
Yeah, absolutely. I love that discussion. I love this segment of this podcast.
And there can be rules that are subjective in nature that allows you to still have the ability to navigate price action. Like, for example, I have a rule that, to confirm or not to confirm, it depends on the multiple time frame situation, but that allows me some degree of subjectiveness in how aggressive I want to be getting into a trade versus if I need to wait on confirmation. Not every rule has to be a hardened algorithm rule. Confirmation, for example, can be one of those subjective rules. But in terms of, just to answer Jesse's question, what's your favorite strategy in this market? My favorite strategy on any market, this market 2 years ago, 5 years ago, 10 years ago, is a multiple time frame breakout with an increase in support going into the breakout. That will always be my favorite setup to take. I just wanted to answer the YouTube question.
Yeah, no, that's great. I feel like we could do a whole segment on that. Maybe we do a one-off kind of what's your favorite setup? I like that. But guys, thanks for joining.
We draw our favorite setup. Yeah.
Yep. Now, guys, thanks again for joining me on a holiday, and a big shout out to Nick behind the scenes. He is the producer. He's the one clicking all the buttons, making us look pretty, fixing our sound in real time. So, Nick, I know you're out of town, so thanks again for joining us. And guys, we have a new platform coming called Tick Plays. It actually just went live at the end of last week, and to get it going, we are running a crazy sale. It's 33% off of any evaluation. Code BLAZE. It's good until the end of May, so you have 5-6 days left. Load up some evaluations, and the coaches and I will be trading this on our live streams. I'm actually starting a 50K evaluation that I'm only going to be trading live, try to document, showing you guys how to pass an eval, pass the buffer, and take payouts in real time, and let's do it together. And other than that, everybody, until next week, stay profitable.
Take care, everyone.